Hello friends, this is Dr. OG Crypto here, your mentor and your tutor for your trading journey. I'll be introducing you to the best forex and trading course for a total newbie or an amateur or a professional trader. My goal for creating this course is to make it free and also make it even more relatable and better than any trading course you can get for $1,000. In this video, I'm going to be introducing you to what Forex is and how you can make money through Forex. So now let's start with what is Forex. Forex was coined from two words. Is a combination of two words, foreign exchange. So FOR was gotten from foreign, then EX was gotten from exchange. So Forex means foreign exchange. That's where Forex was coined from. And Forex is actually the biggest financial market that you can think of because we have different financial markets. I think we have like 3 or 4 financial markets. We have cryptocurrency, is a financial market on its own. Stocks is a financial market on its own. Forex is a financial market on its own. So Forex is the biggest financial market because about $6 trillion are being traded on a daily basis. So now one thing that I want you to know about Forex is that you have to be very consistent. One, you must seek out knowledge first, and number two, you must be consistent. If you are not consistent, you are not needed, or I will not advise you to actually go into Forex because some days might be good, some days might be bad. But when you look at it overall, you see that you are still on the upside, you are still on the profit side. And with proper guidance and knowledge that you are getting from me, you are going to be a successful Forex trader. So let's dive into it. What is the definition of Forex? I can define Forex as the simultaneous buying and selling of two currencies of the world. Simultaneous buying and selling of two currencies of the world. In the world or globally, we have like 195 countries. 193 joined United Nations, just 2 countries did not join the United Nations. But we have 195 countries globally. So, every country has their own currency and every country interacts with each other. So, in the process of, let's say, Nigeria interacting with another country or US interacting with another country, it will involve them exchanging money because in Nigeria we are spending naira, in the US they are spending dollars. If you bring dollars to Nigeria to give someone that is selling pepper is useless. You understand? But in the process of transferring or converting your dollars into naira, that is what we refer to as foreign exchange. That's what refers to as Forex. You get? So that is Forex. So is the simultaneous buying and selling of two currencies. If I give you my naira so that you can give me your dollar, that is I'm buying your dollar with my naira. You get? So that is that about that. I'm very sure that I've actually explained it very well for you. So now one thing that you must also know is that Forex is bigger than any other financial market. In fact, it is 200 times more bigger than the normal stock market that we know. You understand? So now after saying that, so what are now the opening hours? How can you trade Forex? When can you trade Forex? Unlike crypto, that it is 24/7. Every 24 hours, every 7 days, like around the clock, you can trade crypto. But in Forex, it's 24/5 in the sense that you can trade for around 24 hours, but you can only trade 5 days in a week. You work Monday to Friday, then Saturday and Sunday is for resting. You understand? So you see that it is very flexible and it's actually a very lucrative job that you might want to venture into being a forex trader. So now, but despite the fact that we have 195 countries, which means that there are a lot of currencies out there that you can trade. There is not all currencies that we trade. You get? So they are now divided into different categories. So we have what we refer to as major pairs, we have what we refer to as minor pairs, and we have what we refer to as exotic pairs. So now, out of all the 195 countries of the world, is only 7 currencies that are being traded like uh very well. Among all those currencies that we have, is only 7 that are being traded very well, and we refer to them as what, as major currencies. So in the sense, and they are referred to as major currencies in the sense that they involve dollars, United States dollars. They involve dollars. So any currency that you are trading against each other that dollar is not involved, we refer to them as what, as minor currencies. Refers to them as what, as minor currencies. Then we have what we refer to as what, exotic pairs. So let us go into what are now these major currencies. So the major currencies of the world, like the major currencies that you can trade in forex, are Euro USD, GBP USD. If you notice, you see that there's USD, there's USD, there's USD, there's USD, there's USD, there's USD, there's USD. So that is major currency pairs. So any currency that you see that they put USD there, so it means that what is a major currency. You understand? So Euro, Euro USD, GBP, Great Britain pounds, USD, USD JPY, all these ones is you can actually trade them. This is Canadian dollar, this is franc, this is Japanese yen, this is Great British pounds. So that is each countries. And so the reason why we call them major currencies is because they are the ones that have higher volumes. So because they have higher volumes, so they have smaller spread. That is, the difference between when you want to buy and you want to sell is actually very, very minimal. So after that, so now you can see we call them forex pairs. That is two things. We are trading two currencies of the world together: Euro USD, GBP USD. So that's why they call them pairs. So that is major pairs, currency pairs. We also have minor currency pairs. So minor currency pairs is that what, there is no USD attached to it. There's no USD attached to it. And another thing is that all these popular currencies, you can also call them another names. For example, USD, they can call it buck, or you can call it greenback. GBP, you can call it quid. Euros, you can call it what, fiber, and so on and so forth. Swiss franc, you can call it Swissy, and so on and so forth. All these ones are still introductory pass to cryptocurrency. Now we have what we refer to as cross currency pairs. When we say cross, it means that what, or minor currency pairs. You can call it cross currency pair or minor currency pairs. As I've told you before, they do not include what, US dollars. So instead of saying Euro USD, so, and GBP USD, so you now trade Euro against GBP. You trade Euro against CS franc. You understand? As long as USD is not there, you call them what, minor pairs. We call them minor pairs. So one thing about minor pairs is that they are not as voluminous and not as volatile as what, as the major pairs. You understand? So that is that about cross currencies or minor pairs. Then we still have another one that refers to as exotic pairs. These exotic pairs are very, very volatile. So, and they are very, very risky, because people that are trading these exotic pairs are not plenty. You get, they are rarely traded, they are rarely spoken about. It's like someone that is in Singapore, like trading Singapore dollar with US dollars. So all those ones, or trading Turkish lira to euros, or Hong Kong dollar with US dollars. All these pairs, they are called exotic pairs. That is, they are not traded at all. They are very, very less popular. So because of that, they can just dump at a particular time, or they can just spike up. You get? So they have high risk or high reward. But for the purpose of this video, I'm just going to be telling you that you should just focus more on the what, on the major pairs. Now, if you are now very good with the major pairs, you can say, okay, let me look into what, into minor pairs. So, but for now, since you are still a beginner, even if you are a professional trader, what are you looking for? What you are looking for is you can actually print it from all these 7 pairs. By the time professionalism in forex actually has grades, when you get to some certain levels, you see that you don't even need to be trading all the 7 pairs. You can just pick 1 or 2 and you are okay with it. Just 1 or 2 pairs. Then you master everything about that particular pair very well. So that is that about that. You get. So then I've been talking about PS. I said it means that what PS means 2. That is, you are combining one country currency with your other currency of the so now, for example, this Euro USD, now this is a forex PS. Now there's something called quotes, currency quotes. When they say quotes, what does it mean? It means that what I quoted Euro with USD. So now, which one is the base currency and which one is the quote currency? So this USD is the quote currency, while Euro is the what? Is the base currency. So what it means is that what? So if I say I buy, it means that what? If I say I bought Euro USD, it means that what? I use US dollar to buy Euro. So therefore, because of that, Euro is stronger while USD is weaker. That's the reason why I say, okay, let me quickly transfer to Euro. It's because what? Euro is stronger while USD is weaker. So when I sell, it means that what? When I'm selling Euro USD, it means that I believe that what? Euro is weaker while USD is stronger. That is why I'm quickly converting or selling my Euro to what? To USD. You understand? So that is what currency quotes means. So this is the quote currency, while this is what? The base currencies. You understand? Now, who are now the people that participate in the forex industries? There are 4 types of people that participate in the forex industry. Number 1 are who refers to as the speculators. Number 2 are people who refers to as interbanks. Let's say Zenith Bank trading with Jais Bank or Kuda. That's as interbanks. Speculators. Let's say me, I'm a speculator in the market. You are a speculator in the market. Like individuals trading in the market are referred to as what? Speculators. So speculators, interbanks, institutional banks. There are some people that they are there for investment. They collect money from this person, collect money from this person, collect money from more like venture capitals. You understand? So institutional banks, they also participate in what? In forex. Then the last but not the least, market participants are the government and central banks. Government and central banks. So the first 3 that I mentioned, the speculators, which is you and me, the interbanks and the institutional banks. Institutional banks or financial institutions, they actually participate in the market for profit making. They participate in the market for profit making. What about government and CBNs and central banks? They don't participate in forex for profit making. They participate maybe just to regulate their local currencies against the currencies of the world, to checkmate if there is inflation or whether there is deflation in the market. You understand? So that is it. But you and me, we actually contribute like 2 to 3% of the real market participants. You get? You see that we cannot actually move the market. Whether you are trading with $10,000, whether you are trading with $100,000, we can still not move the market. So we just, because of our knowledge, we just say, okay, because I heard this news that United States did this and this, or because of my analysis and I saw that, okay, when United States dollars, US dollars reach this particular level, it fall. So because of that, I take advantage of my knowledge to actually profit from the market. You understand? Which I'm going to be sharing everything with you in the videos as we go on. So now let's now talk about forex terminologies. I'm sure that there are some terminologies that I've said that you don't actually understand. So I'm going to be explaining it for you. Number one, I talked about PS. It means you are combining two currencies of the world together. That is what PS is. So that is it. Then other terminologies that we still use in forex that you are going to be getting familiar with as time goes on is brokers. When we talk about brokers, who are they? Brokers are actually brokers are people that allow you to participate in this forex. So we have people like XNet, we have companies like SNEX, HFM, FXTM, XM, Access Market, and so on and so forth. You understand? So they are the one that help you to they provide the platform for you to actually do the buying and selling of this forex pairs. But there are some things you must know about these brokers before you can actually go and say, okay, is XNET I want to be using, is Access Market I want to be using, is IC Market I want to be using, is HFM I want to be using. Number one is that you must make sure that they have regulation and their security is tight. Number two is that you have to make sure that they have tight or good spread, in the sense that like they don't charge you higher commission. You will have to see that they have a fast deposit and withdrawal. You understand? And you have to see that their platform supports MT4 and MT5. Don't worry, as time goes on, maybe I'm going to recommend maybe one or two broker for you, so that you won't have to stress yourself looking out for all these things that I say you must look out for before choosing a broker. So that is that about brokers. So now, how can you now make money from forex? How can you make money from forex? You can make money from forex through trading different aspects of forex. There are different aspects of forex. You understand? So there are different aspects of forex that you can actually venture into and make money. So you might decide that you want to be a currency trader. You might decide that you want to be a currency trader. So this one involves trading the currencies of the world, whether these ones that I've explained together before, whether is you want to be trading Euro USD, GBP USD, USD, JPY. So you can actually say, okay, this is where I want to stay with and be making your money from here, be profiting from here. You might decide that you want to be a commodity trader. You can decide that you want to be a commodity trader. So commodities are actually like, they are not currency of the world, you get, but they also trade them. They are divided into three main areas. We have metals, we have agriculture, we call them soft commodity, and we have energy. So all these things, they also have charts on TradingView, and you can trade them to make money from them. So you might decide that you want to be a commodity trader. Example of those commodities, the very popular one is this gold. Gold, we call it ZAU, XAU USD. So you can actually be trading it. It might be, say, okay, I want to just be a commodity trader. Example, I want to be a gold trader. You see some people calling themselves gold diggers or gold traders. It's actually because they are trading commodities. So you can be trading commodities, you can be trading oils, US oil, UK oil, all of them have charts. You can be trading them and be making money. You understand? You might decide that, okay, I don't want to be trading currency pairs. I don't want to be trading commodities. You might decide that you want to be a synthetic trader. You want to be a synthetic trader. You might be making money from synthetic indices. So now, when we say synthetic indices, they are simulated markets that work like real markets. That is, is like virtual of Sportybet or virtual of this Bet Naija, in the sense that they are being created, like they are simulated, they are computerized. You get, they are not real dollars that you are trading. You get, but you are just trading it. The way the chart moves is the way they move too. They just work like real market. So the prices are generated randomly by the computer. You understand? So that is what synthetic indices is. And they have different types of synthetic indices. You can decide that, okay, you want to be trading crash and boom. you might decide that I want to be trading volatility indices, I want to be trading jump indices or range breaker indices. You understand? So you can choose any one that you want to be trading, whether crash and boom, volatility, jump, and so on and so forth like that. So now this uh, volatility indices now, these are the list of synthetic indices that you can trade. All of them have different examples under them. Like volatility indices now, volatility 10 index, you can say, okay, it is volatility 10 index you want to be trading, is volatility 25, volatility 50, 75, and everything you want to be trading. And what it means is that what they represent the real market volatility. So volatility 10 means it includes 10% of market volatility. Volatility 75 index means what? It includes 75% of market volatility. But it is volatility 75 index that people trade most, by the way. You understand? So you can choose anyone, just master it. You understand? I'll be telling you the steps you can be using to analyze the market later, all these charts. So you can choose whether it is jump indices you want to be trading. You understand? You can choose if it is crash and boom. There's crash 1000, there's crash 500, there's boom 1000, boom 500. Anyone you want to be trading, you are welcome. So what are now the advantages of trading synthetic indices? I said they are not real market, they are just created, simulated by computer. So number one is that there is no effect of fundamentals. Let's say there is war, there's Donald Trump just announced one news, or there is natural disasters. They are not in fact affected by that. You get? So it's purely technical analysis skills, and if you are good with technical analysis, you are good to go. So there is the spread and leverage are actually very, very, it allows you to like use high leverage. So if you want to make money, you make quick money. So another thing is that unlike, I told you about Forex that is 24/5, in the sense that 24 hours but 5 days. But if you are a trader and you feel like Saturday and Sunday, you don't just want to sit down idle, you can actually be trading synthetic indices. So 24/7 synthetic indices is on. So now, what are now the broker that you can use? I told you about the broker you can use for commodities, whether currency pairs. I say you can use XNET, you can use HFM, Access Market, IC Market, XM, and so on and so forth. The broker that you can use, that is the platform that will allow you to do all the buying and selling for synthetic indices, is only Deriv for now. It's only Deriv that you can use. So that is that about that. Now, apart from trading forex pairs, apart from trading currency pairs, apart from trading commodities, synthetics, you can also venture into prop firms to actually make money. So example of prop firm, there are a lot of prop firms out there, like over 300 prop firms that you can choose. So prop firm is that they will give you you use your small capital to actually buy a large account. Let's say you can use like $20 to buy $5,000 account. So they will now give you some challenges that, okay, take the account up by 10%. So once you've done that, the account is now yours. So you'll be managing it. You get? So you can also make money through prop firms. A lot of prop firms out there. So you can get whether FTMO, Funded Nest, Five Stars, Alpha Capital, Trades Yards, Gold Funded, a lot of prop firms out there. You can also make money from there. You understand? So I hope by now you already know, okay, you have idea of what Forex is about and what Forex entails. You get? So now let's talk about trading sessions. Let's talk about trading sessions. I said you can trade 24/5, that is 24 hours in 5 days. You get? But at the same time, there are some times that I will advise you that you should trade, because those are the times that there is a much volatility in the market. If the market wants to go up, it will go up. If you want to come down, it will come down on time. You understand? Instead of the markets doing sluggish. So now, I forgot to tell you. I said the major currencies you can trade are 7. I want to tell you that despite the fact that Nigeria is a country too, but we are not. You can't trade NGN. You can't trade Naira in crypto. You can't trade Naira as a currency. You understand? In Forex. It's sad. We are part of the countries that we know to get volume like that. So now there are four big sessions that you can actually know about crypto, about forex, and make money. So we have the Sydney session. That one ranges from uh, Nigerian time from 10 p.m. to 7 a.m. You understand? From 10 p.m. to 7 a.m. Tokyo session is from 12 a.m. to 9 a.m. London session is from 8 a.m. to 5 p.m. London is a little bit closer to Nigeria. You understand? So because Nigeria now, I think will be 7 a.m. when they are at 8 a.m. You understand? So New York session, you can trade from 1 p.m. Nigerian time to 10 p.m. Nigerian time. If you look at it, you see that there are some times that are overlapping. Like within this London now, you can still, because London ranges from 8 to 5. So within one, once it is one, it is two sessions that are being traded that are occurring together. So because of that, in those overlapping sessions, London and New York sessions, tends to be much volatility. So you can take advantage of those sessions to actually trade and make serious money. So now, how does these trading sessions, how do they impact the market moves? Because a lot of people are trading at that particular time, because majority of traders are in London and New York. So when their session opens, when it's time for them to trade, so there will be a lot of volume. And when there is a lot of volume, the companies that are giving you access for them to buy, for you to buy and sell, so their spread is like the commission they are charging you will be very, very low. You understand? So that's why another reason why you should know about trading sessions. You understand? So other terminologies that I still want to tell you is what we refer to as bid and ask price. So if you open your MT5, you are going to see something like this. You'll be like, what is all these things that they are telling me like this? I don't understand. So you can see that the decimal of this one, 40 and 42, are very high compared to others. So this is the price you want to buy Euro USD. This is the price you want to sell Euro USD. You understand? So this is the price you want to buy. This is the price you want to sell Euro USD. So the difference between the person that want to buy and the person that want to sell, by the time they do transactions together, you know that will be 2, abi. So that 2 is what we refer to as spread, and that is the commission that your brokers will actually take from you. So that is what they charge for actually completing or placing that trade. So that 2, what do we call it? Is pips. You get? So it's pips. So there is another thing that I want you to know, which is what pips. So what do they mean, pips? I'm very sure you'll have seen some people calling themselves Michael Pips, Ade Pips, and so on, Pips Layer, and so on and so forth. So pips is just like point. It means point in percentages. Point in percentages. The real definition is that is the 4th digit number after your decimal. 1, 2, 3, 4. This is 0. You get 1, 2, 3, 4. This is 2. You get? So that is what pips is. You get? Although for JPY PS, for JPY like this one PS, you see that it's not up to it's not 4 digits number. You know this one 1 point then 4 digits number. For JPY PS is just 2 that is there. So the second decimal is the pips in this case. You get? Then we know something called lot too. So there's something called lot. Lot is like volume. The volume of a particular with if you want to place a trade, let's say with $50 now. Let's say you want to place a trade with $50. So how many volume of Euro USD do you want to buy with the $50? So there are different types of lot size. We have standard lot size, we have mini lot size, we have micro lot size, we have nano lot size. But all these things, you don't really need to rack your brain around it. When I get to MT5 navigation, so I'm going to show you what everything is all about, and you see that MT5 can even calculate everything for you without you stressing yourself. this one is just like, because it's an introductory video, and also so that one person will not be telling you that what you know, but you let them know that you actually learned from what? From Dr. OG Crypto, and he taught you everything you need to know. By the time you are done with the course, you don't need to actually like pay for anybody again to still teach you. You understand? So you just need to sit down with all what I've taught you, go over it over and over again, and you are good to go. So now if I place a trade down and I use one standard lot and I use one lot, what it means is that what? Per each movement of the market, I'm making $10. If I use 0.1 lot, for each move of the market, I'm making $1, and so on and so forth, like that. You get? So that is what lot size is all about. That's what lot size is all about. So in the next video, I'm going to be doing MT4 navigation for us. You get? But let me just show you how this MT4 looks like. See example now. This is how MT4 looks like. You get? So now I'm very sure that you've seen screenshots like this and you don't understand what it means. You don't even know what all these things means. You get? So I'm just going to explain it for you now. So what this thing means is that he placed these trades. And he's already making $149 on this, making $151 on this, making $150 on this, and he used a 0.01 lot size. So with that 0.01 lot size, it means that for each movement that is happening, you already know how much he's making. You get? So that is that. So this is the profit. This is how much he has profited. The trade moving in this direction, he has made, when you add everything here together, he has made $1,153. He has made $1,153. So now his balance, it means he entered the trade with 1,123. Like before he starts trading, it was 1,523. That was it in his balance, like before he placed these particular trades. So after he placed these trades, and these trades are in profits, is equity. That is the total amount of money that if he closed this trade, so is what? 2,676. So if he close all these trades now, his balance will move from this 1,523 to 2,676. So equity is like the balance that you have before and the profit that you are making. If it is loss too, you see that equity will be less than the balance because they will remove the loss that is making from the balance. So that is what equity means. What does margin means? Margin means that what? From this your 1,150, for this your 1,523, all this trade that you placed is only $988 that the broker took from your balance. They took $988. That's what you use to open all these trades like this. That's what margin is. That's what you use to open. So if you close all these trades now, all these trades is $988 that you use to open it. What does free margin means? Free margin is that you see that you're already in profit. You're already in profit of 1,153. So your equity is already reading 2,676, and you've already used, like the trade is already eating $988 from your money. So if you remove this 988 from the 2,676, it means you still have this free margin. That is this free money for you to still trade. So if you want to open more positions now, you still have 1,688 left for you to open any other positions that you want to open. There's something called stacking. Stacking is that you are opening more position when you still have other running trades. So you still have 1,680 to still open more position. Margin level is like the percentage of how your trade is still healthy. You understand? With this 270 percentage, it means that you still have times 2 of the money that you are spending already to open this trade to still open more trades. That is what 270%. You know, 270% divided by 100, that's what 2.7. So you still have times 2.7 of the amount you used to open trade still available for you to what? To open more trades. So that is that about free margin. So I'm very sure now you can tell if someone send a screenshot for you. You already know, okay, he's making $149, making $151 on this trade. You understand? He entered at this particular price. Now, this is the price that the market is currently. He entered at this particular price. This is the market is currently. He long or he buy the market. If he sell to it will show. You get. So the time was 9:37. This is his battery percentage, his Wi-Fi and everything. So that is that about that. You get. So thank you very much, everybody. So in the next video, I'm going to be opening Bybit for us, and we'll be navigating it one after the other. Let me see the next course we'll be talking about. Okay, the next course will be introductory class to trading proper. You understand? You know, when I was talking about crypto, I said you can do airdrops, you can do crypto jobs, you can do InfoFi, you can do trading to actually make money. In Forex, you can trade anything, whether for synthetics, whether commodities, whether currency pairs, and so on and so forth. So we will now be, because Forex is already trading on its own that you can make money from. But of crypto, I said various ways where you can make money from. So, but we are going to be dwelling on one of the aspects of crypto where you can make money from very well, which is what? Trading. So that will be our next class. So see you in the next class. Thank you very much, everybody. Bye.